going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign of what's going to happen to these other workers moving forward.
Welcome to the Crypto Teacher Stock Channel. And guys, please like and subscribe if you do like what you're listening to. Please inform your friends and family and spread all over social media. It is imperative that we get back to learning finances and understand how the world really works. Because once we understand how the world really works, we understand that everything is planned out. This video is just to make you think. Now, you know on the Crypto Teacher channel, I bring you a just to make you think video almost every day. But this one here, guys, is going to be on the actual stock channel. Now, we're going to go over the funny article first. We have the NFL offers biting all 30 football stadiums for the C-word sites. All right. We also have stocks at an all-time high. And guys, remember, I'm not your financial advisor. It's not financial advice. Please do your own research. But make sure you are looking at the reopening stocks, because that's all they keep talking about is we need to get this economy open back up, and they want to get this bill passed because they want to do the infrastructure for the fourth industrial revolution. But they definitely want people out and about. So then what? So they forget all about what's actually going on, what actually matters, and they're back being distracted. So your casinos, guys, your cruise lines, your airline stocks, believe me, they're going to come back. Oil is going to come back. That's what I keep telling you about. But this one, guys, is going to be why stocks keep hitting these all-time highs, because we see all the manipulation going on. And we know the Fed is behind it. We see the yield curve steepening, guys. They're just automatically flooding the market with money. That's the reason why the stocks are moving up. But we see on the higher end, the yields are rising on the higher end, the 10 and the 30. So guys, we know the day of reckoning is happening. We see the manipulation right in front of our face. But that's the reason why I'm bringing you this video. Now, when it comes to TV, CNBC, Fox, sometimes they give us the truth. 90% of the time is not. They want you to look one direction while they do another. But at this moment, on this video, they're giving you absolutely truth and nothing but the truth. And you know that's what I'm about. Because yes, the truth hurts, but what does it do? That's right. It sets you free. Y'all enjoy the video.
But don't look now, but the yield curves continues to steepen while it's only received a fraction of the coverage of the inverted yield curve of 2019. Remember those days? It's time to consider some potential ramifications because they could be huge. Now, the yield curve between the 5 and 30-year now at 146 basis points. So the obvious implications, right? That means a strengthening economy, but also faster pace of inflation growth. Now, interestingly enough, St. Louis Fed President James Bullard yesterday predicted a very strong economy. Those are the words out of his mouth for the second half of the year as the virus wanes. He also said vaccinations have made the rounds. Households will be able to tap into exceptionally high levels of savings and financial resources. He then said the Fed policy, though, has been appropriate given the crisis and that they're in, and that the Fed has a long way to go before they even think about adjusting their buying. So on that note, I've got the two perfect guests for this to find out if they think this is appropriate. Quill Intelligence CEO Danielle DiMartino Booth, along with Walzer Wealth Management President Rebecca Walzer. And Danielle, I mean, these are your former colleagues, right? So you're always railing against them. How long really can they do this? Because they take the victory laps. Hey, you know, we're recovering because of our work. And they continue to make the case, though, for $120 billion a month in accommodation. Can they have it both ways forever?
You know, Charles, what would we do if Fed officials had three hands? Because it's always on the one hand and on the other. I mean, don't give them a third. And don't try and goad me, Charles. But look, what Bullard is saying is so hypocritical. The economy clearly does not need as much accommodation as the Fed is providing. The Fed is simply afraid to even tap the brakes or even suggest that they should be tapping the brakes. And yet they're saying that the economy is set to roar into the second half. They're also saying, though, that they need that stimulus spending. And don't worry, we'll take care of the financing. We'll do the underwriting. But don't forget the economy's on strong footing as well. We need Gary right now. I can't find the words about how infuriating this is.
We don't have Gary, but we got Rebecca. So your thoughts, Rebecca.
Yeah, I mean, this is the steepest since 2016. And, you know, it's interesting because the 120 a month, it certainly, if it's this steep, if we don't need this much, why are we going to continue to pump in this much? But yet you're exactly right. She's exactly right. They're thinking out of, you know, three different ways at one time. They don't want to make the wrong move. But obviously, you know, we have to look at the actual data every single month and see, do we need to pump in another 120? I mean, you shouldn't assume that it's necessary indefinitely if the economy does start showing some improvement.
Well, Gary would say that they've created a monster with the stock market that's become so addicted to this that they even hint of sobriety, the market would crash. Forget about even making changes that somehow they're sobering up. Down goes the market. Hey, let's switch to the federal government now, because President Biden saying in this proposal to raise the federal minimum wage to $15, he says, hey, it's going to help low-wage workers out of poverty. It's going to help certain communities. Of course, businesses and economists, they warn this thing is going to hurt the U.S. economy and cost us jobs. So, Rebecca, I'll start with you on this. What's driving this? Because I'm sure President Biden has access to these major businesses that say, please don't do this.
Well, as he loves Wall Street and dishes out stimulus to Wall Street through various policies, you know, he's trying to give the little guy here a bone, I guess I would say. And yet the problem is we have two problems. And I hate to come across as Ebenezer Scrooge, but I'm just going to tell you, we have two problems. In 2019, the CBO did an analysis of raising the minimum wage and found that 1.3 million jobs would be lost. So I'm not saying that we should have it as low as it is. It hasn't been changed since 2009. We need some updating and even inflation. But the point is, you've got so many states that have such a low cost of living, Charles, that you raise it to $15 and jobs will be lost. And there's no way around that. You can't dictate. Go ahead, Charles. Sorry.
And that's why Senator Manchin is against it, and he's a Democrat.
Yes.
Hey, I've got one final question, only a minute left, and I've got to go to you on this, Danielle. I want to go back to Bullard because when he spoke yesterday, he also says that the Federal Reserve has nothing to do with what we're seeing with the short squeeze phenomenon, individual investors, the market. Don't blame it on the Fed, he says. What are your thoughts?
Look, Dave Portnoy is a hero to the world. And how did he find his following initially? Don't fight the Fed. He understood it. A monkey can understand it. And the fact that there's any kind of disagreement or any kind of, deniability, it's outrageous, Charles. Everybody knows that the foundation of all the speculation has been built on don't fight the Fed.
All right. Well, maybe if they do have three hands, they'll use the other ones and knock back a few shots. Danielle, Rebecca, thank you both very much. Appreciate it.
Thank you, Charles.
Speaking of knocking back a few shots, if you guys